February 12th, 2026. London Stock Exchange Group announces, we're moving security settlement onto blockchain. Not trading, settlement. Most people don't know the difference. If this works, London controls how ownership worth trillions is finalized each day. If it fails, that power and that money flows somewhere else. This isn't a tech upgrade. This is about who controls the final ownership confirmation in the financial system. In capital markets, this is called settlement rail migration. Why now? LSEG stock down more than 35% over the past year, roughly £20 billion erased. Pressure to cut settlement cost isn't theoretical anymore. It's structural. Regulatory sandboxes are opening. Competitors are watching. If LSEG doesn't redesign the rail, someone else will build it. The power to confirm ownership of trillions shifts away. When the rail moves, the money moves with it. The question isn't whether blockchain is better. The question is, who writes the final ledger and anchors financial gravity? Here's what most people miss. When you buy a stock on your app, you think the trade happens instantly. It doesn't. What happens instantly is the order gets matched. Someone agrees to sell, you agree to buy. That's the trade. But ownership, that takes 2 days. T+2. Why? Because after the trade, a network of institutions has to reconcile their ledgers. Your broker's ledger, the clearinghouse's ledger, the custodian bank's ledger, the central depository's ledger. Only the last one, the central depository, is legally final. Think of it like a property deed. Banks record it, lawyers record it, insurers record it. But only the land registry decides legal ownership. If there's a dispute, the land registry is the source of truth. The central securities depository is the land registry of stocks. Your brokerage account shows you own shares, but the depository proves it. For decades, settling one trade meant passing through 4 ledgers. Every handoff adds delay. Every handoff adds cost. Billions are spent every year just making sure everyone's numbers match. This is the reconciliation industry. An entire sector exists for alignment alone. LSEG is now saying, we're moving the final ledger onto blockchain. Not all assets, not yet, but the direction is obvious. Trading needs deterministic sequencing at ultra-high speed. Blockchain architectures aren't built for that layer, so trading for traditional securities still happens on old infrastructure. But for tokenized assets, bonds, equities, private markets, trading and settlement both move on-chain. That's the new territory. The real shift is a change in the settlement model. It turns 4 separate ledgers into one shared ledger. Everyone validates together. You can imagine it like everyone maintaining one public spreadsheet together. No one can secretly change history. Every transfer has a timestamp. The whole network syncs in real time. No reconciliation departments. But here's the trade-off. Traditional settlement is slow, expensive, but reversible. If there's an error, you can call someone. File a dispute. Humans can intervene. On-chain settlement is fast, cheap, but less flexible. Errors need pre-approved protocols and multi-party approval. No single customer service rep can override the system. It's not that mistakes can't be fixed. It's that the fix requires consensus, not a phone call. This isn't better or worse. It's a different kind of infrastructure, different risks, different power structure. But the stakes don't change. If the ledger is wrong, ownership is wrong. And if ownership is wrong, the system breaks. Stocks aren't bought, they're written. Ownership isn't transferred, it's re-recorded. Next time you hear blockchain finance, ask one question. Did trading change or did the ledger change? If trading changed, that's a speed upgrade. If the ledger changed, that's institutional transformation. So what happens if LSEG succeeds? Settlement time drops from T+2 days to T+ minutes. Reconciliation costs collapse. Entire departments disappear. Transparency increases. Audits become simpler. And if they fail, markets split. Exchanges run different settlement systems. The same stock clears differently depending on where it trades. Ownership stops being universal. There's no single ledger everyone trusts. This is why the pressure matters. LSEG isn't doing this because blockchain is trendy. They're doing it because investors are demanding lower costs. Because if they don't control the new settlement layer, someone else will. Real-time settlement, lower costs, higher transparency. That's the surface story. The deeper shift is this. The ledger didn't disappear. It moved from the depository and the courts to protocol codes and governance committees. Settlement has always been invisible, the plumbing no one thinks about until it breaks. Now it's becoming the most fought over territory in finance. Not who trades, who writes the final record. The land registry is being rebuilt, and whoever controls it controls the system's final button. Thanks for watching. This is the fiscal ledger, decoding the systems we still live under. The modern world wasn't born in a moment. It was engineered over centuries by capital, law, and design. From medieval credit to modern markets, Europe and North America wrote the operating code of power, and we're still running on it.